So this is kind of interesting. I think NVIDIA, of all companies, might just be one of the best inflation-proof stocks in the market right now. I'm not even kidding you. Now, a few months ago, I said this was a $200 stock. I got out after riding from 130 to 200. But now I think I was wrong. Looking deep into this company, I completely missed the real growth engines of NVIDIA. And looking at the company right now, I think I was really mistaken about how good it is. I think that the main growth engines for this company, which I completely missed in my initial analysis just a few months ago, are not really the consumer business. I think the growth engines are coming from elsewhere. AI, cloud computing, autonomous driving, e-commerce, the whole remote business. These are the real strength of this company, especially in inflationary times. Now, here's the thing. They have every single thing you can think of that's really good for inflation. They have pricing power. They're pretty much monopolizing the market at this point. Their cash flow is insanely phenomenal, as I'm about to show you. Their cash to debt ratio is really good. And their scalability is scary. I mean, they can scale without spending a lot on CapEx. It's really kind of insanely terrifying for their competitors. My mistake was focusing on the consumer business. I'm not going to make the same mistake again. And I think I might be loading up on a lot of NVIDIA to prep myself for inflation. But then again, this is just my opinion. Might be inaccurate, might be wrong, might be the ramblings of a madman. Go right ahead, pull back a chair. Let's do this. So the first thing we got to take a look at is the DCF. Right here, I have my EBITDA growth for the next 5 years. As you can see, I have it at 50% growth per year. Now, we do have to say rest in peace to the 28% corporate tax, which improves our DCF quite significantly. And as you can see right here, only $3 billion in CapEx. I don't know how this company gets so much cash flow, so much margin with so little CapEx investments, but check me on this and you'll see. This is quite terrifying. And again, this is one of the strong suits for inflation that I just mentioned. At 10% discount rate, which is still quite significantly higher than any interest raises we can see in the near future, just to be on the conservative side, a 4% long-term growth rate, an 18 multiplier. By the way, this was my mistake in the first DCF that I did. I think I used a 12. This is definitely way more technology and innovative company rather than a manufacturer of, hardware. So it's definitely not 12. I don't think it's yet 25, but it definitely should be priced at 18. And given all that, we have a $331.50 for perpetual approach, $388 for the EBITDA approach, and a total average of $365. Compared to the current $296, we have a 23.3% upside for NVIDIA. And I think that's not even considering the ARM deal or inflationary impacts. That's just NVIDIA being NVIDIA. I think we have a bigger upside, but let's look at it when we hit 365. And looking at tip ranks, you can see the consensus is quite the same. $360, that's what we have from Wall Street analysts right now. I swear to God, I didn't look at this before I did my DCF, but it's kind of reassuring to know that they're thinking the same thing that I am. We have a high number of analysts right here and an average upside at 22.5%. The highest we have is currently 400. And the average is 360. Lowest is 285, which is pretty much just $10 below the current price. I can show you some of these, but you'll see that they're all pretty much the same. So based on only 5-star analysts, as you can see, which is what I sorted right here, nobody's giving it a sale. Everybody's giving it upside. Not a single analyst on this list is giving us a sell. We can go individually into these 5-star analysts, but they're all quite qualified. And you'll see that everybody sees the thing that I missed in my valuation just a few months ago. And I'm honest enough to admit that I made a huge mistake, but now I'm here to set the things straight. Now, as you can see, nobody's shorting the stock. 0.94%. Less than 1% of smart money is shorting the stock. Rightfully so. It doesn't make any sense to short it, but let's see how overvalued it actually is, which I don't think it is. Check this out. And here's the two metrics that matter that actually are not being told to you. EV sales and price to sales. How much this company is generating in cash flow versus how much it's trading for. So EV sales is $26.98. Price to sales is $27.56. So under 30 on both. Now, it's not a cheap company, but under 30 for EV sales and price to sales seems to be right in the realm of Palantir right now at $20. So even though you can't really say that NVIDIA is a cheap company, it's definitely not overvalued. Look, it's a company that generated 24.2 billion in sales in the past 12 months. If you just go back 5 years, they had 5. They went from 5 to 24.2. That's almost a 5x growth in revenues in 5 years. But what you're seeing on the screen right now is even more impressive. Their growth of operating income went even higher. While the business grew 5x, the operating income grew from 800 to 8 billion. 10x, almost 10x. So from 5x revenue, they generated 10x operating income. That's insanely efficient. And again, another strong suit for inflation prep. Look at this. They have 19.3 billion in total cash. Now, 19.3 billion. Now look at the debt. The debt is 11.8, which means we have over 7 billion of extra cash versus debt, which they can repay today, but there's no reason. Just cheap interest. Once the interest rates goes up, once inflation hits, they can easily erase this debt and still have 7 billion of cash on hand, which shows me they're definitely prepared for inflation. And looking at the balance sheet, look at this, 40.6 billion assets. Now they do have some goodwill here, which is about 4. So let's say it's 36, right? 36 billion in assets. 16.8, let's say 17 in liabilities. So more than 2x assets versus liabilities. This company is prepared. It's as pristine as my grandpa's bed on New Year's morning. You know he's not going to be in it. We're going to have to look for him in a dumpster. Look at their growth numbers. Revenue growth this year was 64%. Next year, still expected to do over 40% revenue growth. I think they're actually going to beat this. Now also, look at the profitability. 64.4% gross margin. Look at this. EBITDA margin 40%. Net income margin 33.8%. I mean, this is insane. These are monopoly numbers. Now, if you assume this consistent level of growth for this company, which I do, I think I was a fool for saying that this is a $200 company. I think it's way higher. In fact, our current price just specifies that at $365. But I have a hunch we're not going to stop right there. And looking at this might be your opportunity. It's down 8% in the past 30 days. So I think if you're looking for a nice entry point for the stock and you're ready to admit your mistake like I am, 296, 295 might be the way to go. But again, just my opinion, might be inaccurate. I'm not a financial advisor. Please do your own research. But I personally think this is a really attractive entry point to get this company at a reasonable price. And by the way, if you want to play around with this DCF you just saw on the screen, it's available to download on our Patreon page. You can join. It's $5 per month. Plus, you'll be supporting the channel. You can participate in our Zoom calls. You'll be getting access to our new website, which is coming up quite soon. A lot of good stuff. You can subscribe below, $5 per month. But again, this is not mandatory. If you want to watch this video, which I did about Nikola right here, why it's great, I'm just kidding. I'm just kidding. If you do want to watch a video about another great inflation stock, which is, by the way, Tesla, I did make a video, which will be right here. And since we're coming up on Christmas, if you want to give me a Christmas gift, I never asked this, but you can subscribe right here if you want to. Thank you so much. We'll see you tomorrow.